basically that product is a fantastic way to demonstrate to the customer that we want to protect him and bring him a solution, because basically we cover what is not planned, what is unexpected. And when you have a problem, so when an accident occurs, to make it simple, you have a problem. Do you want to have another problem? We are the solution in a way. Hi, my name is Edouard de Lamarzelle, and this is the future of insurance.
It is really good to sit down with you. We connected through this work Capgemini was doing on sort of where mobility and insurance were coming together, which was super fascinating to me as a car nut, as an insurance geek. And it was like everything that I think about on a daily basis. But you actually have gotten to do this as your career. So can you just share a little bit of your background so people know the context you're coming from?
Yeah, sure. I mean, so I'm 50. I'm going to turn 58 soon. I started my career actually in a quite fascinating market, which was the Middle East, Saudi Arabia, 4 years, and then set up for the first time an insurance company in the United Arab Emirates. Then I posed for an MBA, to do an MBA. And then after that, during my MBA, actually, I did my dissertation on new entrants in the insurance industry. It came simply because in Saudi Arabia, right after the Gulf War, the first Gulf War, I lost quite a big account against a new entrant. So not a traditional insurance player. I was selling medical insurance, and we lost it against a clinic.
Wow.
And that was a big, a big hit for me. But the first lesson where I found somebody that was doing the same business as us that we in fact underestimated. And somehow I say, well, it's quite interesting. And when I had the time during my MBA, therefore, I did my dissertation on the new entrants in the insurance industry and whether they have a competitive advantage. And this is how it starts. So I did my MBA in 97, graduated in 98, December 97. And then I happened to have a professor, that Rafael Ramirez, that put me in contact with Volvo Group at that time.
Yeah.
And Volvo says, well, do it. Set up my insurance company in France. And that's how it started. So for experience in 98, set up the insurance company in France on car insurance. And 3 years after, PSA, so Peugeot Citroën, those are brands which are not known in the US, but now Stellantis, okay?
Yeah.
And they are quite big in Europe, those brands. They told me, okay, well, do the same thing, but worldwide on all our markets.
Yeah.
And that was late 2000, and until now, this is what I've been doing. So I'm probably the only guy in the group having the same job for the last 24 years, setting up insurance business and running insurance operations.
It's fascinating to me. My wife and son are in Italy right now, and they had a DS, a plug-in hybrid, and it's now I think my wife is like, why can't we get one here? It's like, well, that's a good question, but that's a totally different show. I mean, you were part of the move that some of the OEMs were making into insurance very early on, before we were contemplating, or I mean, maybe the car companies were, but really autonomy, EVs, mobility wasn't a word people were using the way we use it now in the broader context. Again, maybe, for the car companies as sort of strategy planning discussions, but the world is quite different when we talk about kind of where insurance fits into the puzzle. Subscription car ownership. I mean, Volvo was one of the first to do that, where insurance now needs to be part of the puzzle. How does insurance fit into the context of the current state of the auto industry and how the OEMs are thinking about it? Because you've now had perspective from, a couple, and one of them being top 3 globally, really.
No, yeah, absolutely.
3 or 4, yeah.
Actually, that's why my job was so interesting, I think, because I think PSA and Stellantis clearly are always has been a group that regard insurance as strategic, in the sense that we do, and I think that's important. And recently, for the last several years, I explained the strategy to stakeholders such as reinsurers or joint ventures and so on. And usually, the story is relatively simple. In fact, it's a lot of common sense as usual. First of all, I mean, in the name of what are we going to do it? I think that's what is important, and that will answer your question. I think there are three main reasons, or that's the reasons why we have one. Reason number one is total cost of ownership. Car insurance, because that's the most known product. Of course, there are a lot of other insurance, okay, but auto insurance or car insurance is mandatory in almost every market.
Yeah.
So it's part of the budget, okay, and therefore, when you look at the trend on B2B, where in front of you have professional buyers, you can see that also on the B2C segment, you start to have that behavior. And therefore, if you don't control every component of what is to own a car, how much it will cost, then you can have a problem, because we design beautiful cars like everybody. Our cars are nicer, of course, but we design beautiful cars and so on, but ultimately it's the price that counts.
Yeah.
And if you end up being obliged to do a discount on your car price because the cost of insuring the car is too high and you don't have a control on that, then you have a problem.
Yeah. Yeah.
So total cost of ownership is reason number one. Reason number two is also diversification of revenues. And we will have the tendency to think that behind revenue, there is, if it's properly run, margin.
Sure.
Okay. And the reason number three is, which I think for me, because I'm an insurance guy, is basically insurance has a great, it's a golden mine, because first, reputation is not that great. It's not a very attractive product.
Yeah.
And in a nutshell, insurance is the one product you're going to buy, but not to use it. Because if you use it, it means that you have an accident, and you don't want to have an accident.
Yeah.
Nobody wants to have an accident. But basically, that product is a fantastic way to demonstrate to the customer that we want to protect him and bring him a solution, because basically we cover what is not planned, what is unexpected. And when you have a problem, so when an accident occurs, to make it simple, you have a problem. Do you want to have another problem? No. You need solutions. And often insurance is perceived of, maybe I'm going to have a problem, or I will have a problem because my insurer, I cannot contact him. A lot of efforts were done by the industry, don't get me wrong. But
yeah,
that's the perception of in the mind of the people. So when you come with, in fact, don't worry, we are here to help you and we are here to resolve your problem, obviously that helps a lot to build the loyalty of the customer, you see. So three reasons: total cost of ownership, diversification of revenue, and you have a problem, we are the solution in a way.
Yeah.
Now, what I think, I'm probably anticipating one of your question, the main point is, okay, it's good to have this, but can you do it? Can we do it? And why do we think we can succeed? So this is where, and for having worked for the last 30 years in this topic, there are clearly lots of assets, and I think the easiest way to explain it is if you list that. So imagine we're a startup, whether we are a risk carrier or ultimately, what do we want? We want the customer to buy the product. Okay.
Yeah.
So we need the customer to say yes. And why do we think he can say yes? But so when you list out everything you need to have in insurance to succeed, it's okay. You need a name, you need a reputation, you need a distribution network, you need a repair network, you need a logistic to deliver the promise. You know, in some markets, I was in Saudi Arabia. Sometimes I had cars I could not repair. I had a major problem. Okay, you need to know the subject matter insured. You need to quantify the risk and so on. So when you list all this, you need key moments as well. That's why you have TV ads, because it's simply to, okay, think of me when, and so on. When you look at this, we need a name. We have it.
Yeah.
You need, to have an image. We have it. I mean, nobody knows Jeep insurance, that everybody can understand. Jeep or Ram insurance. Okay.
Yeah.
Everybody can understand. You need the distribution network. We have it.
Yeah.
We need the repair network. We have it.
Yeah.
We need to know what are we going to insure. Well, we design the car. We manufacture the car.
Yeah.
We design the repair standards. We know it. Okay. We have the logistics. Okay. the moment we have it, whether we know when the customer is going to buy the car, we know when the car is going to be serviced and so on. So we have everything.
Yeah.
Right? And that makes that, obviously, in fact, our problem is not to have, where a lot of insurance companies will have to build this ecosystem and will have to invest, as we naturally have it. The difficulty and the challenge is how to make it happen, to use it. This is, in fact, the challenge. Okay.
Well, I got the 3 strategic imperatives, and I understand that, like, you're essentially pre-positioned to deliver on all of this in a way that anyone else who does insurance would have to set up to do. They'd have to do the advertising and the network building and all that, and partner with companies like you, really. The thing that I'm always wondering about is, but does that mean you have to be the one to do it, or does that mean a partner approach or something else? And I think that's where, in the insurance world, where I get into not fights, but professional fights with people about whether the OEMs will be doing their own insurance or not. It's this question: is it a partnership approach? Are they setting up carriers? Is it MGAs? What is the mechanism? Because none of what you've said insists that the OEM builds its own insurance company. It just says that it's solving for the delivery of insurance somehow, which there's lots of ways to do that. So what's your take on that component of it?
I think it really, it's a very good question. I think it really depends on the market, and besides on the risk appetite of the OEM. Insurance is a serious business, like every business, by the way. Okay, but with very strong specificities. I mean, I really became very specialist to try to explain insurance in very simple words. One I use is, okay, you design a product, you hope it's going to be sold. Well, in insurance, you have the same. You have the same hope, but you will have another one. Is once it is sold, you hope it's going to be profitable, because that's insurance. We cover a loss that is going to happen in the future, and so on. And of course, we don't know who's going to have a claim or whatever, and so on. So it all depends. After, it's a question of arbitration between what you want and also what is available in the market. I think that one of the reasons why Stellantis, or PSA at the time, decided to set up our own insurance company is probably because with the market, we were not finding what we wanted. Transparency, the flexibility, the agility, all these kind of things. We are in very complex environment where IT is relatively complex. To integrate with our system is quite a big call in a way. Yeah. So when you are with an environment in ecosystem where you have your own insurance setup, obviously it's much easier and so on. Besides, you have to share sometimes some strategic information, that all these kind of things and so on. So it creates a lot. So there are always solutions to that. So after, it's really a question of appetite from the shareholders, from the OEM. So my take on that is every model works because we have both. We have the model where we have set up insurance companies, which is a big wow, we really go for it. Yeah. To the model which is traditionally the one we have, and where we set up partnership. Yeah. Also, because in some markets it's very difficult to get the license, or very long or whatever and so on. So I think what is important on that is, of course, if you have your own insurance factory, you are in theory more flexible, but you take more risk. So there is this element and so on. But both systems for me works. What's important is how the ecosystem will set this in the radar, because you have to understand that we deal with people that first have no clue about insurance. I give you an example. I mean, we use the same term, but not with the same definition. Premium in insurance is selling price. Premium for a car manufacturer is bonus. Yeah. Okay. Claim is where we will create value. Claim for them is a complaint. Right? Yeah. And besides, there is this perception as well, where, if there are losses, it's reinsured, but reinsurance is only a kind of, a cycle that you amortize or whatever and so on. So it's all these kind of things that, we have. So what's important is, how do you generate an ecosystem where basically it's put into the radar of the salesman, of the management as well, and so on. And then you have the process, but a process that is okay insurance-wise, because you have a lot of insurtech or a lot of new players that came in, were in distribution. But if the loss ratio is 1,000%, I mean, who is interested in having one combined ratio of 1,000 or even 300 or whatever and so on?
Yeah.
So it's all this kind of thing. So both model work. Today, you have more and more insurers that are keen to be a solution for that. I think there's still a long road.
Yeah.
This is what I found in the US, for example. I found this as well in Europe. But I think that clearly the fact that some insurers, some OEM set up their own insurance company and decide to go for it was a kind of a wake-up call. And probably some key players are there. Now, it's true that it's also difficult to find players that are, for example, in the US, to find players that are in the 50 states. You don't have a lot. I mean, that can provide a service and so on.
Yeah.
You have, of course, and so on. It's the same in Europe. To have, for our key markets, which are basically the G10, so France, Germany, all these kind of things, to find an insurance company that is present in all those markets, it's a bit of a challenge. So that creates also barriers, but there are always solutions, of course.
Yeah, I mean, it's like you said, there's no single answer. It may be geographic, it may be situational, and it may be temporal, that for right now, because of XYZ, we need to take this approach, but that doesn't mean 10 years from now, or if these things happen, that we wouldn't necessarily look to a different solution.
Yeah, I mean, ultimately, both models will have the same role of the game. Do you, in the way you sell, generate anti-selection? And then you have a problem? Okay. Are you efficient, and do you have customer that ultimately says, okay? And in what, and how efficient you are? Because if it is okay in 5% of the time you make a quote, of course, it's not the same setup that if it is in 20 or 25 or 30% of the time you make a quote. So, and that's the rule of the game, whether you are your own insurer or with a partner, is exactly the same. There is no, privilege position or whatever and so on. And you arrive to this only by setting up the thing. The thing is that there are markets where definitely it works very well. Okay. And there are markets where the learning curve is, it takes time.
Yeah.
But the fact is that, and especially, again, it's easier to speak about auto insurance, but for other products we can also. But for auto insurance, it's the only product that the customer for sure will buy. So if he has not purchased through you, it means you missed something.
Yeah.
And this is what I always say to my team. Listen, he purchased the product, not to you. So find it.
Yeah.
What's wrong and fix it.
Yeah. There's a longer term play for the OEMs around a number of things: mobility, subscriptions, etc., autonomy, long term. Whenever, of course, like if you believe Elon Musk, we've had it since 2018 or something, or it's always coming later this year. But somehow it's never this year, I guess. What I'm curious about is, and this is something I know you've seen the paper that I wrote. This is one of my points, is I think there comes a point in the core strategy of the OEMs for what you all are trying to monetize with your products and services, where insurance has to be baked in, or those sales fall apart, or those strategies can't stand because, as you say, the insurance has to be there. And if it's not baked in, now we've got a problem on the delivery, and the friction of getting insurance could stand in the way of the core business's strategy. Do you see that long term? And I know it could be decades from now, but that's sort of the wake up call I've been trying to sound for the industry. Is it's not our game. It's the OEM's game. We don't make the cars. And, I say, like, no one talks about their 56 Geico policy or something. They talk about their 56 Ferrari or Corvette, Corvette or whatever. I don't even know if there were Ferraris in 56, I suppose, but maybe not Corvettes. Anyway, you don't have this like nostalgia for insurance that you do for cars. It's the car industry is in charge here. So as I look at the potential strategies that the OEMs have been quite open about, timing could be a question. I see insurance having to be baked in, and I think the traditional industry is not recognizing the need to be flexible enough to support that. And so I don't see how the OEMs couldn't have to solve for it yourselves.
So your question is, so it's the topic about embedded insurance?
Yeah, I mean, ultimately it's delivered through embedded, but it's like if subscription ownership takes off down the road, and been tested in different places, and it's never really gone mainstream, and most of the OEMs have pulled out of it, but there are still a few who do it. Typically, insurance is part of the equation because it sort of has to be. You look at other subscription-based revenue drivers, you look at autonomy, it becomes hard to understand how insurance wouldn't be baked into the offer and the monthly price you're paying for all of these things. Do you think that's a flawed perspective that I'm taking? And I'm happy to be wrong and be challenged, but you have much better sense of that than I do. That's just me looking on from the outside.
So it depends on the market again. In Europe, you have some regulation that makes that, you have to have the option for the customer to opt out of the subscription. Okay. Okay. After it's a question of convenience for the customer in terms of process and so on. So there are markets where it's going to be difficult. There are markets where systems do not allow it for the time being and so on. So and a lot of progress were done on this. No, I think and again, back to the point where it's part of the TCO, the total cost of ownership. It's quite clear that every element of how much it is to either own or use a car will be important. So obviously the finance technique, whether it's a leasing or private lease, all these kind of things will come into the picture. And I'm as far as I'm concerned, I think that clearly there is room for everybody, but certainly the OEMs, when they integrate things, I mean, it works very well, and we have markets where it's amazing.
Yeah. Well, you see it on captive financing that you don't have to use, the Jeep offer to finance your vehicle or whatever brand you're getting, but tends to be a good rate. It's all wrapped together. You sit down right at the dealership when you're getting your car and it's done, versus having to go to a bank or find other financing. People have the option, they can opt out, but there's a very attractive total process. Even, take subsidies out of it or rebates or something. It's just so much easier. So if I can get insurance right here, right now, and leave with my car, or I have to make a call and read off a VIN number and do these other things, sure, I can do that. And regulatorily, I have to be allowed to do that. But it's always going to be more attractive to take the path of least resistance. So I hear you that there are markets where you can't force it. But if it's and again, this is kind of my point to the insurance companies, is we do need to wake up, because if there's this easy path to getting coverage right there, right then, from the car dealership, from the OEM, and it's relatively speaking similar numbers to if I went through all the trouble to go get it myself, maybe I just take the offer that's in front of me.
No, it's true. I mean, it's true. But also the insurance company are doing an amazing job in trying to secure their clients and so on. They react and so on. Okay, but it's true that this embedded approach and the all-inclusive approach and so on is quite powerful, and then it's really it's quite obvious in that respect. There will be, however, the element of the risk selection, which is, let's not forget that. And I can't help. I'm an insurer, so I care about the technical result, because this is what pays the bills. Okay, what pays the dividends? Shareholders, they can bring capital, but if it's not profit, we have a problem. Okay?
Sure.
So this is where you have to find the right compromise between, how few questions are raised to the customer, but how precise am I in my underwriting and so on.
Yeah.
So, and this is where clearly there is a lot of progress and there is a lot of things that are coming. And the fact that now cars are, smartphones with four wheels in a way, because they are connected, that's to me the big revolution, because it opens a lot of things, provided, of course, there is a consent from the customer and he's very well informed as to how we're going to use this and so on, which is very important. But where there can be a lot of solutions. So you can have also the option to the client says, listen, it's either the 50. So in the US, it's a bit different. Okay, I know. But in Europe, typically, in some markets, you have to raise 53 questions to get the premium. Okay. Yeah. including the additional driver or this kind of thing. Okay, but that's how you're not. And if you want to be competitive, you have this. Now you can have other approach where basically we capitalize on the fact that the customer, we know him and so on. So provide, of course, he gave the consent, we can simplify the process and so on. So there is an element, and everything which is usage-based insurance, of course, is something which I think is the future of insurance, to be honest.
Yeah.
We launched an offer a long time ago, still on, and clearly it works very well.
Yeah. When you talked about risk selection, yes, there's the questions you want to ask and making sure you're getting the necessary information. But the other side of it is no carrier wants to eat every risk in a given area or market segment or anything. It's too much exposure. You said like you end up writing in a 300. But on the OEM side, you would like to sell out of all of your production. And it doesn't matter if this person's a good driver or a bad driver. As long as they pay for the vehicle, the sale is the sale for the because you know the price going in, you know the margin going in. For an insurer, it's not like that. So even if you had your own carrier and you were willing to write insurance on anyone who walked in, you may not want it on your paper or your capacity, or you may choose from an insurance side, we don't want any new business we see this in the US with homeowners, no new business in California and Texas and whatever. We've seen that in auto before. Well, that doesn't mean that, none of the Stellantis dealerships want to sell cars in those states anymore. So you still need to solve for the insurance. And this is where, to your point, it may be partnership, it may be having other capacity to tap into through an embedded mechanism. And I know you've recently launched something with Bolt. You look at these sort of platform-based solutions as well, to try to solve for the fact that no one carrier can always take every risk, but the dealership would like to sell its inventory. No,
you're right. And because there are always some exceptions or some extreme cases. Okay?
Yeah.
And we have the same in all markets. So very young drivers or drivers where the driving behavior was really bad, but, for whatever reason and so on. But often the market has a solution. Okay, so when the customer, I think what's important here is more to, are we able to help the customer to find a solution?
Yeah.
And we have a lot of activities in any case where we don't always we would like to say yes to a customer, but sometimes we cannot.
Yeah.
On finance, if the credit score is low or whatever and so on, it could be something where there are rules of the game and we follow, and that's being professional as well. But does it mean that, hey, I don't have a solution, so sorry for you and feel too bad? No, I think there could be some solution. So this is probably the thing where it's one thing, because probably one thing different, or not different, but yeah, one specificity we have is that a customer, if you compare an insurance customer to an insurance company, to an insurance customer to Stellantis, the insurance customer to the insurance company, the customer is, there is only his insurance portfolio. So it can be home, it can be toys insurance, it can be traveling, you name it.
Yeah.
For us, there is a lot at stake. He's a car owner.
Yeah.
There should be a finance normally. Okay. There is a maintenance program. There is a warranty, breakdown insurance also.
Yeah.
So there is a lot at stake. And there is also the fact that, hey, he's going to replace the car, or maybe he's going to take another car and I want him to, and so on. So I think the consideration that the group has is also different. So there is at stake a pie which probably is greater in terms of customer loyalty, okay, and on which indeed we can therefore try to find solutions. But we need also the market to follow us on this.
Yeah.
And we need the system, and that's why what we have with Bolt is amazing.
Yeah. I could talk to you about this for hours and hours. Thank you so much for sharing some of the inside view. I think if I take anything away, it's the point that I try to leave in the paper as well, is actually we don't know exactly what or where or when, but you made a point earlier about flexibility and needing to be responsive and be able to work with the needs that the OEM has wherever you sit in the equation. I think that's still the point, is we don't exactly know how it will play out, but if we're not paying attention and thinking about it and building the ability to, in an agile way, respond to those needs of potential partners, then they will solve for it without us which, us being the insurance industry, which I think is an important warning for us to be mindful of, that we do need to create more flexibility because there are changes coming for sure.
No, I agree. I think it's a good summary. And what the thing I can say that, and given now I can compare with 30 years from now,
yeah,
I can see the evolution of the market. It's quite amazing. I mean, today we see solutions that was absolutely inconceivable 30 years ago, in terms of system, in terms of appetite, in terms of capacity to doing it, or I don't know. Sorry for my English, but today there is a lot of things. It's more to make it happen, which is in fact the main. So it's the strategic vision. It's also the appetite to doing it. It's the investment. It's accepting also the return path of insurance, the volatility, all of that, and also the rigorousness. When I joined the group first, strategy for me was, let's learn how to sell. It's useless to set up an insurance company if you have up and downs, Russian hill, commercial performance, 1 year high, low, second year low. No, it doesn't work this way.
Yeah.
We have to, have a recurrent volume. We have to be selective, and in a way which is okay for the customer and okay for the insurance partners. Their profit is also our priority, because that's the only condition of permanency, of course.
Yeah.
Long-term commitment. So.
Yeah. Oh, well said. Well, I will continue to watch the space. I do appreciate the insights from someone who's lived in really the coming up of this whole discussion that's going on right now. So thank you so much for your time.
You're welcome. You're welcome.
It was fantastic to get to sit down with Edouard, and he's leaving his role. As you said, he's moving on to something different at the end of the summer of 2024. So this was a rare chance, sort of the last minute, to hear his perspective after really being at the forefront of where the automotive industry intersects with the insurance industry and how those lines are starting to blur a little bit. And I think will blur even further going forward. So I'm very excited to get to have had that time with him. And he and I have communicated a little bit over the past year or so since we were in this Capgemini research together. And I just think his world must be so fascinating. But that's me geeking out as a car nerd and an insurance nerd and kind of putting the two together. And, been talking about where those two spaces are moving in conjunction with each other. This piece that we were a part of for Capgemini, we talked about it when I had Lars Boeing on the show. I will link to that in the show notes. But also it's something that I've been talking about for quite a while with my own work around the future of auto or motor insurance, and how I think connected cars, subscription services, and embedded sort of all are coming together. And if you watch the OEMs, the car makers, you see them talking about these things. So hearing it from someone who's living in the midst of it right now, I think it's very fascinating. Obviously, tons of future looking things that Edouard really couldn't divulge and wouldn't do, but I will be watching this space very intently. And I think we all need to. So paying attention to people like Edouard and like the annual reports of the car companies that are talking about this stuff, whether it's Stellantis or General Motors or Ford or Toyota or any of them, we in the insurance industry need to pay attention to it, because it's not actually our business, car insurance. We are a tag along to the core business. It's the automaker's game, not ours. So we need to pay more attention to what's going on there, take our cues and see, well, what do we need to do? Edouard talked about responsiveness and flexibility and capabilities. Be a good partner to them so they don't need to circumvent us. I always say, don't just try to build a wall and make it harder for someone else. Figure out a way to support their aims. And when they're the ones actually calling the shots, because it's their consumer product, we don't really have the power we think we do. So we need to be more responsive to their needs. Anyway, super fascinating. I love that I was able to get time with Edouard, and at this point where he's sort of looking back at what's happened over the past few decades as he's been a part of where this whole industry is heading. So thank you to Edouard, to Stellantis for his time, and to all of you for tuning in. If you find this stuff interesting, of course, come back, subscribe to the show, like it, tell people about it. but I will also put all the things you need in the show notes. So the link to the Capgemini piece and the interview with Lars, as well as my own piece on the future of auto insurance and where I see that all heading. And I hope it resonates. And even if you disagree, that's totally fine. At least you're digging into it, thinking about it and questioning, well, what does that mean? And what's my take on it? You don't have to agree with me. I just want you thinking about these things. All right. I will leave it there and I will see you back next time. Thanks, everyone.